Welcome, everybody. Welcome to Zoom at 8. My name is Julie Ann Peterson, and I am your host every Tuesday night. And I welcome you. Some of you have been here almost all 7.5 years. Maria Tobin is one of those. So if you're new here, I don't think any of you are new. Welcome. We are specialists in multifamily, and boy, has it been difficult over the last 3, 4, 5, 6 years. It's been a challenge. And so when you're looking at a deal, I'd love the opportunity to get involved as your lender of choice. So we're going to need your T12, your rent roll. Those are in Excel, and then your underwriting model in Excel. And then if there's an offering memorandum, we'll take that too. That doesn't come in Excel, that's a PDF. And we will provide you in usually 2 days. If it's agency, we can turn those in about 48 to 72 hours. So you can say, hey, do I want to pay 2 million for this? Maybe I should really be paying 1.7. Okay. You don't want to put in an LOI until you connect with your lender. That's a big no. Jason Williams, everybody. Jason Williams is here tonight. Jason and I have known each other for quite some time. We've done several loans together. A passionate guy for numbers. I mean, this guy sleeps and breathes and eats numbers. So Jason, he is the founder of Ironclad Underwriting Mastery Program. He's also the co-founder of the Academy Presents with his lovely wife Angel, and the managing partner of Lorren Capital LLC. And he has a rich background in real estate investing. Some up, some down. Not always straight line, not always up. We have been together. His expertise spans from single family rentals to large multifamily syndications, with degrees in chemical engineering from Texas Tech University and a 15-year engineering career. Jason combines analytic precision with real estate acumen, making him a trusted authority in the field. So tonight, it's going to be amazing because you're going to get an inside look at how Jason has underwritten a deal, how he has put a deal into his model, how he is looking at and analyzing it and making some educated decisions on, do we want to move forward? If we're moving forward, what's it going to cost? What should we pay? What is the business plan? Now, if you're new here, you might not understand, you know, at day one what your assumptions are, but Jason's been doing this for quite some time. So he knows how he looks at things, and that is a skill that is learned. And Jason will help you understand that, especially with his program. So it is an honor, honestly, to welcome tonight's guest, Jason Williams with Ironclad Underwriting. Welcome, Jason Williams. How are you tonight?
I'm doing pretty good, Julie. How are you?
Oh my God, you are such a rock star. I mean, you're just so like so smart, and I just love it. There's some people in my life that they're not as special as you. It used to be that, the nerds, nobody wanted to be hanging out with the nerds, but I got to tell you, as I've gotten older, the nerds are the coolest people to hang out with. So, Jason, you're a nerd and I'm okay with that, and I hope you are too.
Yeah, I've been one my whole life, so I don't have a
Yeah,
choice in that.
I
So,
love it. It's good. And Angel, you found the love of your life with Angel, and you have a beautiful family, and you came to multifamily through a lot of learnings that your family went through: oil and gas, single family, multifamily. You have a great knowledge of real estate. And so I would love for you to tell us, give us a little bit more, because there is a long background that I did not speak about. But, how did you find that, hey, this is my passion. Numbers are my passion. I see that there is a need for a model like this that you developed. You're a PhD. Kind of walk us through your journey.
So I wouldn't say that numbers are my passion per se. It's more creating systems to make running numbers easier. So because if I just like numbers, I would just stare at spreadsheets and that gets tedious and boring. So I want to get through the spreadsheet as fast as I can. So that's how I started. I was an R&D engineer, um, and I had to, as an engineer, take the data that my lab tech took and convert it into something the salespeople could take. And so I started using Excel macros. I'd write everything in VBA so that my lab tech can just enter the data, hit a button, we get the data out, and it can go to the salespeople so that my time and input was minimal. And so I took that into underwriting as well. So I can right now upload a T12, a OM, and a rent roll, click a button, and let it do everything for me. And then I can get into like the weeds of where things start needing to be tweaked and stuff like that. So
Wow. So you got into real estate. Well, how long ago would you say? You say 50 years between the two of you. Is that right?
we we got our first real estate investment in '03. It was a single family. We still have it. We've cashed out, refied it several
Mm,
times, bought more investments with it. And yeah, I helped my dad with his real estate. When I was in high school, I'd mow the lawns and I would
mm.
change out electric or not electrical panels, but outlets and light switches and
Yeah.
paint and all that. So I was doing that since I was in high school. Angel's been growing up with it with her grandparents. So yeah, at least
You
50
know,
years between the two of us.
I love the fact that both of you took it to the next level. My kids, I drag them to all of our rentals. Hey, I'll be right back in 20 minutes. I got to work with this tenant. I'll be right back. And they are sitting there for a couple hours, not enjoying the experience. So the fact that you guys took it, took the advantage, learned from it. I mean, there's so many people that get into multifamily that take a course, but they've never been in the trenches like you turning, painting and doing the lawn and all of this is valuable experience. So high five to your folks for doing that. And I'm sure you're passing this on to your kids. Like I say, my kids said, I don't want to have anything to do with it. Yet two of them now own homes. So they still see some of the value in it. And hopefully it'll be a long-term thing. So side
I,
note, we have Frank here, and I know that probably Frank needs to leave here shortly, but I do want to talk before he leaves about your podcast. Um, Frank is, I think he started out as the guest speaker. And and then all of a sudden, no, he is the co-host. And I got to tell you guys, can you flash up your picture on this podcast? You guys is really good.
yep.
Sometimes when
So,
you're new, you
so
don't want
from
to ask the questions you think that you'll be embarrassed by. Both uh, Frank and Jason, they unpack it in such a way that is so easy to understand. And you're like, oh, I wanted to ask somebody about that, but I was embarrassed. So here are these two guys. And how many do you have now? Do you know how many episodes?
56 episodes. They get published every Wednesday, and we've been doing it for a little over a year now. So
It's really, really good, you guys. And so what is the name of it? And let's put it in the chat.
Ironclad
Paula will put it in
Underwriting
the chat.
Podcast.
Say it one more time.
Ironclad Underwriting Podcast.
Okay, so everybody needs to pull that up.
And it's
Frank,
on. also on my YouTube channel. So
Ah, there you go. Ironclad Underwriting. Frank, what do you have to say for yourself when it comes to the podcast? What are your things that you think why somebody should come to it?
I mean, it's a combination. Number one, most people consider underwriting boring, but what we try to do is we try to mix it up and help people really get better at underwriting. And between our experience, I think it works out very well.
Yeah, and you're very entertaining too. You're just you guys, seriously, it is a great information, great podcast. I've been on it. I've been so lucky to get on it, and it's been good for my business. So, really tune in on a weekly basis. It's great. And as Angel said, his teacher comes out to explain the specialty laden pieces, which is true. You're very good about that. So, with that in mind, I want you can stop sharing and let's have you unpack why we need to use your model or learn more about your model and how you can underwrite a deal for us tonight.
yeah. So as I said, I started out using Excel, um, and I started getting a hold of anybody's model I could find, like Rod Khleif's, Michael Blanc's, Brett Sumrock, Joe Fairless, Rob Beardsley, you name it. I tried to get a hold of it. It helped that I was helping people sort of like as a consultant for underwriting, and they would send me their model and I would go through it and I would find errors in it. And so I started taking all these models, taking what I liked and developing my own, because I've learned that most of them were lacking in some form or capacity. And so it's like, I'm going to like make the ultimate model. And so then I started consulting people with my ultimate model, and I would fill out everything, send it to them, and they wouldn't even be able to open it. I was like, why can't you open it? It works on my machine. It doesn't, it should work on your machine, but it didn't. And so I mean, with all the macros and everything on all the settings, I had it perfect for my model, but other people's Excel wasn't set up that way. So then it's like, I got to get away from Excel altogether because Excel is just dumb. I mean, it's a powerful tool, but it breaks. It's super fragile, and you do something wrong and everything breaks. So I have some clients on the screen who know what I'm talking about. And so get away from Excel, and I created my own web app using my model. I also improved my model over Excel, because with Excel you're limited to what the cells are. I mean, you can't just add like, all right, let's add a new loan. You have to have like all the loans built out, and you can turn them off and on, but you can only limit yourself by however many you have. So with a web app, everything is programmatic. So it's like, oh, you need 25 different loans or whatever, you can do it. If you have 45 different waterfall structures and hurdles, you can add that as well. So it might not make sense to do it that way, but you can with my web app the way I have it set up. So, and also another thing is I sent you a deal that I underwrote through my web app. I shared it with you. I didn't send you the Excel of my underwriting, and somehow you figured it out and were able to get back with me. And so I guess it was successful in that regard too. So,
Mhm. Yeah, I mean, I had no problem working with your model. It is very in depth. I mean, there are things that I don't think a lot of people think about. So I would love for you to kind of walk us through your model without the underwriting. Just show us, maybe do a demo. Would
yeah,
that be helpful? And then maybe even do an underwriting.
yeah, I'll do a demo with you. Let me
Okay.
pull it up and share my screen.
If there's any questions, put them in the chat and we'll, when they come up for you, put it in the chat and then I'll stop the conversation and we'll throw it in and ask Jason to tell us or answer the question. Yeah.
Yeah, and I'm fine if I'm explaining something or showing something and there's questions. I feel free to just speak out too.
Okay.
So here, let me actually log out and log back in so that you
So it took
can.
you how long to build this? I mean, I'm sure it's being
So
uh, it's changing every day, probably.
yeah, I've been wanting to do this for like the last 3 or 4 years, and I've worked with several different teams, um, and invested a lot of my own money into it. Um, but to get to this point where I am now, it's been at least a good 9 solid months of me
Oh,
like working on it almost every day, and yeah, I'm learning stuff all the time. I use AI in it. I don't use any AI for any calculations. Just so you know, it's not going to send out some weird Chat GPT numbers. Every
mm,
number is based off of my Excel model. So, but here you go to my website. If you want to sign up to be a beta tester, you can go to ironcladunderwriting.com/beta tester. And eventually you'll get here, you sign in, and then you get to this dashboard. So let's create a new project. And so I am not going to do anything except upload a PDF for the OM and these Excel sheets for the T12 and rent roll. So it automatically detects that the PDF is an OM, the rent roll is a rent roll, and the T12 is T12. If for some reason it doesn't, you can always go in and change it. Just because sometimes you might just get ABC apartments and then the date with no indication that it's a rent roll. So you can force it to be a rent roll. So then you click create project. And so this does take a little bit of time because I have AI parsing the data. It's going through the OM, it's going through the rent roll, it's going through the D12. It's going to start populating all the information into the model. If for some reason you put in like a wrong rent roll, like for a different property or something, because I know that happens sometimes, you like just start grabbing sheets and you grab the wrong one, it will flag it and say, hey, there seems to be a mismatch in these names. Are you sure that this is what it is? Or do you want to go in and change it? So it
wow,
does
that's
try
great.
to be a little bit smart. It doesn't detect everything, but it is getting better every day. And now it came up with some warnings. So it says, look, 48% of these leases expire within 3 months. Rent growth risk, lost lease is greater than 15%. Verify against comps. And so this is just a little bit of just some, not necessarily red flags, just some warnings you might want to pay attention to.
That's very cool.
So you click OK. And then you can go to look at the data. You can go to the rent roll data, the OM data, or the T12 data. And so let's go to the T12 data. And so here, what this does is it maps everything to like a I guess, listed bucket so that you can keep everything on track. So it looks like here, resident leasing referral. We can probably call that instead of a leasing cancel referral. We can call it, let's call it a concession or something like that. So it doesn't get everything right, but if you look at the color coding, blue is going to be your gross potential rent, red are your losses, yellow are your incomes, orange are your expenses, green is going to be your NOI. So here we can go through and make just, I like to spot check, make sure everything is the way it's supposed to be. A lot of times you might get miscellaneous where it would actually fit something. Like here, gate remote reimbursement replacement fee. You could put that as like miscellaneous, or maybe you can put it in as lock and keys, wherever that one is. Oh, where'd it go? Locking
So you
fees.
created all of those categories and those line items.
Yeah. And
Ah,
if for some reason you don't like it, you can create your own expense or create your own income categories. So if you want to be even more granular for it. Let's see. So my idea is I want to get you like 90 to 95% of the way there. You can look at the T12, the T9, T6, 3, and 1. You can see what the trends are going for it.
so the
Um,
trends you could see on the yearly basis. Is that how you're looking at that, Jason?
yeah,
On the
so
left?
right now you have your T12, which is going to match up your total, which is based on the months. And then your T9 will be like the last 9 months and last 6 months, 3 months, and whatever. So you can see sort of what the performance of it is doing over the past year. So you can look and see late charges have been going up over the course of the year. So if you want to
That's
get
amazing.
into the weeds, you can start getting, it's like, well, why is this going up that much? It's not going to affect like the underwriting, but it can like maybe affect what your business plan would be if you decide to move forward. Um, Employee rent from paycheck. So this could be like maybe an employee unit or something like that. I'm not going to go through all of these because most of them are going to be correct. Um, Not all of them will be though. So, and some of them are zeroed out, so it doesn't have anything for that one. Um, for the most part, it looks pretty good, and so we can click Save Mappings, and then we can close it down. Now, if we want to look at the rent roll, we can go to the rent roll data. It's like we got basically two floor plans, one ones. There's 24 of them, and two ones. There's 6 of them. You can go and verify this with the Excel sheet, um, and so that one looks good. And the OM data, this is just brings in like some of the stuff. It brings in the address,
Mm.
your bill, your renovated stuff like that. Any insurance claims or anything. So not most of this stuff isn't going to apply, and the OM depends on your OM. Some have a lot of data and some don't. So
So it scrapes the most important things that you've targeted that will bring
yes,
attention to it. Okay.
yeah. I have this checklist up here, which pops up, so you can. All right, you can go to each one. You can do a 2-minute analyzer, which
Mm.
you may or may not, or you may want to do before you even get this far. And that's on my website. But you click this, let's see if it pulls it up. Yep. Nope, it pulled up the wrong link. I need to fix that. Visit toward the property and high level market check. So then we can go down and then we can start looking at all this. So this is just to help you see what your next steps are if you get lost. But if
Oh.
you don't care, you don't need it, it goes away. So like for this market, Wichita Falls, it doesn't have a purchase price yet. If there's a whisper price in the OM, it fill it out here. Going in cap rate, let's just say 7.5% because it's an older property, so it's coming in like at 2.44 million.
Hmm.
Um, and that's based on the let's go to cash flow. That's based on the NOI from the T12. And I also, not all the time, every time I get a rent roll and a T12, they never coincide. So I have to um, reconcile them. And there's usually like a few percentage points difference. And this handles that. So let's go
Hey,
back.
I had a question, Jason. Can you
Yeah.
show the stress test for exit cap rates as well and rent increase projections year over year? Just put that in your just remember to show us that.
Yeah, I'll get to it because that's on this tab. So
Okay.
how much time do I have anyway?
You have another, let's say, 20 minutes, 25.
Okay.
Mhm.
So we filled out the revenue and expenses. Now I like to go into the CapEx. We can go in and add a category. We can add a interior renovation or exterior renovation. We can go in for pull for permits and fees or contingencies or others. But one cool thing about like the interior and exterior is suppose you know right away just from walking it that it needs a new pool or the pool needs renovated. So I put pull in and it's going to pull in a value 75,000 right off the bat.
And that's
Um,
based on what, per square footage?
so it's per unit is what it is.
Oh, okay.
But I mean it's like based on the national average. If you're going to be
Oh,
in like New York, you can say, well, no, that's going to be more of a premium value. Or if you're going to be in Wichita Falls, it's like I can get away with economy or budget, or I don't want
hmm.
to do too much to it, so I'm going to do budget.
Oh,
But
that's cool.
also, I could do for it's like, all right, well, I walked the unit, and I'm going to need some countertops, and they're going to pre-fill in the values as well. So or you can type in your own. It's like I bogey. I always type in a bogey if I don't know what it's going to be, and then it's usually going to be like 250,000.
Mm.
Oh, this is something cool too. Check this out. I can type in 250K, and it does it
Oh,
automatically. And if you can't see my screen, I can zoom in.
oh yeah, we got it. It's good.
Another
That's
bogey
perfect.
I'll do is exterior. Do another 250K. Because no matter what age of property I've ever invested in, I've always had like plumbing issues. I've always had to replace drains or something, and it's always more expensive than I expect. So I always put in somewhat large value for plumbing at least. Even if I scope the drains, it doesn't matter. Something's going to break. So ask Frank and Angel about that. They'll know. Another thing on the CapEx is so with interior stuff, a lot of times you have to wait until your leases are up. And so you can
Mm.
apply to the stabilization you have from your lease period or your stabilization period.
Okay, so let me make sure I understand that. It's taking the leases on the exits, the maturity dates, and it's applying it here?
So sort of. Um, so everywhere you can click, there's going to be like a little gear. If
Mm.
you click this button, that'll take you back to the data. We already saw that, but we can click on the gear. And so I have on my renovation schedule, it's going to take 12 months to, or not renovation, stabilization schedule will take 12 months to stabilize, get it up, get all the units renovated and whatever. So if I take this to like 18 months, because you have to wait until people move out to be able to renovate, you can do it that way. If you're going to move people all out, you can do an S curve.
Mm.
I typically do linear. And so right now, this ties into the CapEx schedule. I am working on getting it to tie into like the leases,
That would be
but
awesome.
I only most of my rent rolls only half the time I get like a lease expiration. And sometimes I get like a lease expiration but only on like half of the units. So it's kind
Mm.
of weird. But yes, I am working on that. And that also goes into the loss to lease calculator, which right now is just based on a percentage, but you can do it based on the lease expiration. And if you evict people, you can throw that number out because it doesn't mean anything anymore. Um, so we can close that. So go back to CapEx. So apply to stabilization. So it should. It didn't take. Granted, this still is in beta, so there are
Mhm.
still some bugs, I try to, when I find out about them, I take care of them as quickly as I can. If you need to book support or email me, you can click these links down at the bottom and it'll email me. You say, hey, I found a bug. You come up here, I think that one, report a bug. Hey, I found something not quite right. So let me know that way. Let's see. So we have income, expenses, capex. So now let's create our first loan. So right now, I'll add a loan and I'll let you tell me what parameters to put in, you think.
Yeah, so I'm going to say we're going to be at 6.5, smaller loan. And we're going to be on a 30-year AM.
Okay.
And it is going to be a 5-year loan. And
Okay.
we're going to give you 1 year interest only.
Okay.
Don't be cheap, Julie. Come on.
What's that?
So don't be cheap.
I wish I could change that. The markets.
This is LTV or LTC?
LTV. Yep.
Okay. Is there a DSCR requirement?
125. Yep.
All right. So we're actually at 1.41. So putting in 125 is not going to affect it. But if we're, say, at 1.45,
it'd be short.
It will change the LTV to 68.19. It says 70. So, and then if there's a debt yield requirement, typically like 8 or something. So it fills out all this loan information down below. If we were going to add a loan, we can say, all right, let's add a junior loan, maybe 10%, or maybe let's call it like supplemental or something like that.
So maybe if you have a hard money on the side letter.
Yeah.
To an investor.
And let's say it's due in 12 months or something like that. Or actually, let's say it's due in 18 months, but it doesn't start until month 6. Well, it's still 12 months. So then you can come here and see that. Let's expand it. All right. So it expires then. And it starts up in month 7 or 6. So when you, all right. And so now when you come to the dashboard, you can see, all right, wait, I got 2 loans. Why is it only showing 1? Another bug. So it should come up here and show you 2 different loans here. But we did the financing, cash flow.
Why don't you get rid of the second loan? Because we're not going to do that.
Okay.
Yeah. But you have the capability to do that.
Yep. So you just remove it. And when you remove it, it verifies that you want to remove it. That way, if it's an accident or a misclick, it doesn't delete everything for you. So waterfall structure. Let's add, we can do preferred equity or common equity. Typically, I do like a 8% preferred return, which is how it's set up, and then a 70-30 split afterward. And I do cumulative non-compounding. So if you want to learn more about cumulative and compounding, you can listen to my podcast, or we can talk about it at a different time. But Frank and I did talk about this in a podcast once. So for the most part, if you wanted to add another class, maybe say you want to have some fun people come in, fund FUND at a higher rate, and you want to give them maybe 80-20 instead of 70-30, and maybe like 9%. The way the law's written now is you can't really have side letters anymore. You have to offer all your investors the same amount, whether they come in at 50 or 250K. So that's one reason. So let's do 500K. and it'll automatically fill out the rest of this. So let's say this one's 50K. This minimum really doesn't mean anything. It's just for your own visualization. So you can see how it starts filling that information out. So then we can come back to the dashboard and we can start seeing the kind of returns that we're going to get. And it's like, oh, this kind of sucks. What do we need to do to make this better? Here you can see the capital stack, Class B, Class A, and then the loan structure. So, and then the total capital. So, if you are looking at this, it's like, well, I want to change the purchase price to make it more reasonable. You can click on it, and it'll take you to where it fills it out. So let's make it like 2 million, 2M. You can go back. It's a little bit better, but it's still kind of dismal. So you can play around with these kind of numbers. You can go to the sensitivities. Say you can do exit cap rate and rent growth.
Well, that's what we wanted to have. Make sure that we did some stress tests for exit cap.
So you click go, and you can see everything is red because it doesn't meet the parameters that I set. And I'll show you where you can set those. And these are yellowish orange because, again, they're still below. And again, it's giving you warnings. Hey, IRR falls below 8%. Pref if exit cap exceeds 7.97. So you can also see what it'd be for each individual class, because changing up the class does change up the returns. But for a project level, this is what you get. You can do anything. There's all these variables you can change. You can say, well, what if our hold period is different and let's do rent growth. You can just go and see what that does. So your
What about
IRR,
before and after taxes? Do you have anything to model that, to show that?
before and after taxes?
Yeah, I'm not sure what you mean by that, JR.
I do not. Oh, JR's on here?
Yeah.
So let me show you. Again, remember I showed you there's this, you can click these gears on all of these. It takes you to more inputs. So you can come in here, you can see your annual growth rate. If you want to change it, say, hey, I want insurance to be increasing at 5% every year. Instead of
personalize it.
Every 3, or you can just go back and say, all right, I want every 3. So you can do it that way. You can, if you want to do your percentage rate for your taxes, you can come in here and say, well, for the market I'm in now, it's going to be 2.15 instead of 2.35. Yes, I want it to reevaluate upon sale. And then you can see what it's currently evaluated at based on the taxes from the T12 and the market value. And then you can say, well, I want it to be 70%, just because I know it's not going to be 100. It depends on where you are. In Texas, as a non-disclosure state, this is more of a factor. But if you're in like a disclosure state, it doesn't really matter, because then it would be like the full 100%. But sometimes in disclosure states, I've seen this at 40%. So I think it was like Alabama or Indiana. I was helping someone and I went to their tax site and it says, well, here's your property value, and then here's your taxable value, and it'd be like 40%. And then that's what they apply the 2.15% on. So
Georgia does that, Jason.
Yeah.
It's 40% of your whatever your offer price is, blah, 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 times your millage rate. So
yeah. So there's a few states like that. And so that's another reason why you can do that.
That's good.
Advanced settings, you can change it per year. Again, it's like, hey, well, I know there's a new school coming and they're going to jack taxes up. So instead of increase, or they're going to increase the percentage to like 2.35 or something like that. But if you don't know that, you don't have to do any of that. You can leave it as is and not even worry about
So
it.
customizable, Jason. Jeez.
So I wanted to make this for like a novice who doesn't necessarily know all the answers, but can at least get a reasonable answer, to someone who wants to go into the weeds and start playing with it.
So JR says it's a way to also determine the before and after taxes to determine your IRR. The before tax cash flow, the BTCF, is the rental income generated by the property prior to the deduction of income taxes.
Okay. So I don't do that, but I can.
Yeah.
I can add it.
Yeah.
So
Okay.
and now this last tab is like, well, how do the sponsors get paid? It's like, well, let's see how the sponsors can get paid, and what will it be over the 5-year hold.
Ooh.
So you have all your transaction fees here, your acquisition fee, 2% of purchase price. Maybe you have a disposition fee. Let's turn that on. 1% of sales price. Construction fee. Maybe you're going to run all your CapEx projects, so you want 5% of the construction costs. And maybe you're going to do a refinance fee. So you can do it that way, or you can turn them off. You can make this as simple or as complicated as you want. A recurring fee, you can do, all right, well, let's do asset management fee. And I have seen asset management fees cover like, or go off of like the effective gross income. I've also seen them both based off of like total equity. So you can base it off of the EGI, the NOI, or the total equity. And you can have it quarterly, annually, or monthly. And this goes into your cash flow tab.
I'm curious if you can adjust for a non-syndication model, such as a sole owner or JV.
So
I guess that would be just a Class A, right?
Yeah, just remove that altogether and not worry about it.
So it's good for single family kind of stuff. How does the model work with single family and cap rate and all that? Because that typically doesn't work together.
You don't have to enter a cap rate. It's like, well, for assuming this is a single family, let's say it's, well, let's call it like 450,000. So that would be whatever, and then your rent. These you might have, say, let's just add a unit 322 or something like that. Number of units, let's call this 1,800 square feet or whatever. Rent per month, let's say you're getting 1,450 and you think you can get, that's a lot.
A lot, yeah.
You think you can get maybe 1,750 or something like that, and then you can take these off. So you can do single family. It's just probably a major overkill for you.
Got it. Okay. Cool. Thank you for showing that.
So
you could adjust it for non-syndication.
Yes.
Okay.
You could also, coming back to here, suppose I have storage units, self-storage. You can say, oh, I got like a 10 by whatever 20 unit, and I got 46 of those. And then I got a 20 by 20. I got 98 of these. So you can also do it for self-storage as well. So
and then you get rid of the 322.
Yep. One thing I'm working on is portfolios. Like, well, what if you're buying self storage and a house? You can
Oh.
right now you can do it as like lump it all together, but for like if you're going to do like large multifamily portfolio where you're buying 140 units on one side of the street and 280 down the road or something like that, I'm working on that. Um,
Hmm.
but that's coming shortly.
So my question is, can it give you the best purchase price to hit all of those metrics that we're trying to achieve?
So that's coming shortly. And also wanted to point out you can come in here. You saw like a lot of these things are already filled out, like some percentages and stuff like that. Those are going to be like your app settings, your defaults.
Mm,
And so you can put in like your target LPIRR. So it's like I want at least bare minimum 16%.
mm,
I want 1.8 equity multiple bare minimum. And so that's where the color coding comes in for the sensitivities. But also we'll be coming up with using these to determine the purchase price.
mm-hmm.
So exit and
We got about
valuation.
5 minutes. Got about 5 minutes.
Okay. Well, you can go in exit and valuation. Maybe you want to
Mm-hmm.
put in like 25 bips or something like that. So you can change all that whole period. All this all this is just stuff that pre-fills it out. It doesn't necessarily mean that that's what it's going to be. You can always change it in the app. So like right here, I have the hold period to be 60 months by default, but I can always change it to 72 months or something like that. So, and I also wanted to show a feature that I used on you. So I can come in here to the file and I want to share project. So I can come in here so I can say, Julie, let's see if I have your email in here.
Yeah, Jay Peterson. Uh-oh, Chris said a thumbs down.
On what?
I don't know. Chris, why is there a thumbs down?
Capital, was it lending? Something like that.
Yep. Yeah, you got that.
I can make you a viewer or an editor.
Oh.
If you're an editor, I can allow you to share this with other people. Or if you're a viewer, you want to send it to your investors, but you don't want them editing anything, and you're ending your capital raise in 2 weeks, you can make this expire in 2 weeks so that they
Hmm.
won't be able to open it up again. Then also, if I want to export it, I can export it as a PDF or an Excel sheet, and then you can go in and click what you actually want to export. So,
Wow.
did we get a reason for the thumbs down?
I just put my hand on my head. No thumbs down. I'm loving it.
Oh, okay.
All right. Saved yourself, Chris.
And again, if you need support, you can book support. It'll go to my TidyCal calendar. Go to my
So,
website, or you can email me, or you can also come up here and report a bug. So,
okay, before we go, let's change that pricing. We didn't necessarily like the 2 million. What
well,
would be?
we're not even. I deleted the unit already. We're a
Oh,
single
you did.
family.
Okay. Okay. Darn,
All
darn.
right.
Okay. This
So,
was a real deal, guys. And client was going to pay 2,040,000. He didn't win it. Actually, somebody came in higher price because they had a 1031. So you never know why people pay what they're going to pay, but I don't know if you saw that the returns weren't awesome, but you can imagine if you then had somebody coming in higher than you have to go, what is going on? We're at the minimum, and you just never know who's got the capital and what their deployment is, and what their time frame is, and all of the details around somebody's
and
buying.
everybody invests for different reasons. Some people invest for just like holding capital. They don't, or holding value. They don't really need the cash flow. They don't want to
Yeah.
double the money. They just don't want it to. They want something that beats inflation.
Tax
Sometimes
shelter.
some people do it just to mitigate taxes. So,
Yeah.
but again, on the dashboard, you can click here. You can see the flags that are, or the warnings that are flagged. Like construction, 2 lines are using built-in costs. It tells you to verify them with local vendors or get your own pricing. And that was from like the CapEx, where I just use like granite countertops and the pool renovation. So that's what that's from. Um, LTV, that's fine. Exit cap, this is going through the roof because it went from 2 million to 450K for
Okay.
the single family. So,
All right, Jason. So to wrap this up, I mean, this is an incredible model. It shows so much information. It's so flexible. I'm really impressed. And obviously, you're continue to develop this. You have a coaching program. Can you speak a little bit about that? What can somebody expect? Time frame? What's the cost?
so the cost is dependent on the program you pick. I have like an online version where you can watch videos, and then I have like a one-on-one where it takes your time and my time every week for about an hour, hour and a half. Um, it's about, I originally planned this to be like a 12-week program, but most of my students have been taking like 15 to 16. One student took 21 weeks. And so I go at your pace. If you don't know something or you need to go over something again, we can go through it. I do assign homework, and if you don't do the homework, we don't meet, especially when we start taking longer and longer. But my program is also built around the Excel version of this. And so with this model, I think the time will be cut off. But my course, we never even touched the model until we were about halfway in, like week 6 or 7. We never even touched the model or entered data. So I walk you through where to find information. You can have the best model in the world, but if you put garbage in, you're going to get garbage out. And so I help you minimize the garbage that you put in.
So, what would somebody expect to pay for your model? And does the model only come with the mentorship? How do you price that?
So right now, this model, if you go to my website, it's ironcladunderwriting.com. You can go to pricing, and then you can say become a beta tester, and it's going to be free for now. It's going to be end up being a subscription base. If you're just like an investor, if you're just going to view deals, you're not going to actually actively underwrite it. It's going to be free. And that was that viewer section where it's like you sign up, become a viewer, and then you can view deals and determine if you want to invest in them. If you want to just start out, you can pick the starter plan, and I'm thinking this will be about $50 a month. And the reason why I am going to charge is because it does use AI tokens, and I am actively using AI to like parse the data and stuff. And so right now I am eating all of that cost myself.
Wow.
So I prefer if you don't like go in there and you just start spamming the create project part. And you can see the different packages here. I am also thinking of like allowing to be like white labeled so you can put your own brand and stuff on it as well. But that's going to be down the line. So
Wow, this is amazing. What an opportunity to dive in, educate yourself, whether you are an investor, just a limited partner, or being a general partner. So helpful to start digging in and understanding, does this really make sense? I think this next level of investors are going to be entering at a much different level than what we saw in the last cycle. So, I mean, this is such an incredible tool for everybody. Does anybody have any questions? Any comments? All right.
Thank you, Jason. You're wonderful.
I mean,
Paula.
I was going to add something because he didn't. But as we expand the asset classes that we're going into, it's going to change our underwriting because we'll be changing it for us. So selfish, but as we expand into what we invest in, people are going to have an opportunity to use this in those asset classes more or significantly easier than they are now.
So on that, I have created models in Excel for like retail, mixed use, RV parks, stuff like that. And so I'm kicking this off with multifamily acquisition right now, but there will be ground up development for built to rent. There'll be like condo conversions because I've helped people with all of that. I've helped people with low income housing, so I'm going to add that functionality as well. So I have a lot of models that I'm planning on doing, but I'm rolling out multifamily acquisition first and get that rolling, and then I'll start adding other models, and then maybe it's like, well, maybe I want to add a retail module and a multifamily module. You can then sort of pick a la carte the functionality you need. So
yeah. So, real briefly, you're putting in deals that you're seeing today. You're seeing the asking price. You're getting a real sense of the bad debt, the expense of the loan for interest rates. Summing it up, where do you think you are now, or where are we in this cycle? Is it the best time to buy right now? Do you see it going down a little bit? Do you see we're holding off a little bit? What are you seeing?
I'm wondering if you listen to my podcast, because Frank and I always harp on it's not about timing real estate, it's about your time in real estate. So
That's right.
the time to buy is always now, or time to buy is like, was it best time to plant a tree was 20 years ago, and the second best time is now. So
yeah,
there's always going to be
last
deals.
month, right, Jason?
Yeah, we put in an offer. And actually we were actually pretty close to what the other offers were.
Yeah, we're in best and final.
Yeah. So not too bad. But I mean, yeah. Everybody's selling for a different reason. Everyone's getting out for different reasons. And so you might find a good deal. I mean, just because maybe interest rates are higher than they were 5 years ago doesn't mean you can't make good money. When Angel's grandparents got into real estate, interest rates were in the double digits, or over 20%, something like that, wasn't it? If she's still on.
Yeah, she's here. She's shaking her head.
In 1981, the federal funds rate was 21%. My grandparents got in the late 70s, early 80s.
Crazy.